I'm Keon, a Senior Research Analyst with Lipper. I'm here to speak to you about the fund flows activity for the week ended Wednesday, November 14th. Let's start this week's report by taking a quick look at the market activity. Both the Dow Jones Industrial Average and the S&P 500 Index were down about 4% for the fund flows trading week. This past week's downturn was driven by volatility in oil prices as well as some weak economic data out of China. The volatility in oil prices was caused by Saudi Arabia announcing that they would be cutting its oil production in December, and also announcing at the same time that if needed, the rest of the OPEC nations would join in next year if more production cuts were required. This drove West Texas Intermediate crude down to its lowest level in almost a year. It was also speculated that China might initiate some additional economic stimulus measures after it was announced that Chinese property sales declined this year, as well as that credit in China had grown at its slowest annual pace ever. Let's turn our attention back now to the fund flows activity, and we'll start by taking a look at the macro groups, what they did for the week. Equity mutual funds saw net outflows of $3.7 billion this week. Taxable bond funds saw almost $1 billion leave their coffers. Muni bond funds net outflows here again also $225 million. And money market funds, big net inflows here for this week for this group, about $12.4 billion, as investors seek to wait out the market volatility. We'll take a closer look at each one of the macro groups now, starting with our equity funds. Equity mutual funds, as we said, net outflows last week of $3.7 billion. It was their 21st straight week of net outflows. Taking a more granular look at the data, we see both domestic equity mutual funds and non-domestic equity mutual funds had net outflows this week. Domestic equity saw $3 billion leave, non-domestic $700 million. It was the 26th straight net outflow for domestic equity and the 8th straight outflow for non-domestic equity. We'll move on now, take a look at the equity ETF side of the equation. We actually had net inflows here this week. They took in $6.4 billion in net new money. The major contributors to these increases was the Healthcare Select Sector SPDR ETF, took in about $776 million. And the First Trust Healthcare AlphaDex ETF had about $768 million in net inflows. On the flip side, the First Trust Industrials Producer Durables AlphaDex ETF had net outflows of over $760 million. We'll move on now to our next group of funds. So we'll start with taxable bond mutual funds. This group suffered net outflows last week. They saw about $964 million leave their coffers. The major contributors to the decreases were core plus bond funds and core bond funds. Core plus bond funds saw $463 million leave, while core bond funds, it was $367 million. Moving on now, we'll look at taxable bond ETFs. Net outflows for this group last week as well. They saw $279 million leave. The largest individual outflows among the ETFs belongs to the iShares Short-Term Treasury Bond ETF. $507 million left their coffers, followed by the iShares iBox Investment Grade Corporate Product, which had $412 million leave. And conversely, the SPDR Bloomberg Barclays High Yield Bond ETF took in $261 million in net new money. We'll take a look at our Muni Bond Fund group now. Net outflows from this group as well last week, $225 million left their coffers. The main peer groups contributing to these decreases was high yield muni debt funds and general muni debt funds, which had $168 million and $130 million leave respectively. Last group to take a look at is money market funds. As we said in the intro, relatively big net inflows compared to the rest of the asset groups. They took in $12.4 billion in net new money last week. As we speculated, it seems like it was a safe haven for investors to park their assets and try to wait out the week's volatility. For the week, institutional U.S. Treasury money markets took in $6.8 billion in net new money, and institutional U.S. government money markets took in $6.3 billion in net new money. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week where another one of our analysts will be talking about that week's fund flows activity.